Hello and welcome to Business Lunch and a very, very happy new year to all our viewers from the entire team of Business Lunch here. I'm Nisha Podar and with me is my co-anchor Pavitra Parekh. So Pavitra, this year, like every year, we are starting with a lot of gusto, and I really like the resilience as well as the positivity and the way the market also tried to be in a celebratory mode in the beginning, despite having several concerns which are a spillover from the last year. So there is inflation, there is interest rate hike, there is Russia-Ukraine crisis and the resurgence of COVID scare as well. So all this is what we are dealing with, but still resilience as well as positivity. A quick look at the markets in the beginning. Well, Nifty 50 had really come up with a gusto, but at the moment is seeing some bit of sluggishness, but still almost 0.36% high, 65 points uptick on Nifty 50. When we talk about Sensex, 221 points gained. And well, mid caps are the universe which are gaining the most, outperforming the key indices, 0.7% up, and banks not doing bad. In fact, 0.5% up on some of the big banks. But in the last sometimes some of the banks have lost some bit of ground. When we talk about some of the auto stocks, some of the discretionary stocks, they have shown a little bit of sluggishness and in fact a little bit of sell-off, especially with inflation concerns also hovering for this year. But big boys like Reliance Industries is just doing very well today.
Oh, absolutely. So, I mean, we've come up significantly. We've picked up from that opening lows kind of level, right? And the action today is really all in the commodity names, especially in the metals. Check out what's going on with that index. It's over 2% higher on the Nifty metal right now. So, a lot of these names will come up for you, the likes of Tata Steel, Hindalco. Tata Steel is up 6%. That's the kind of move that you're seeing on this entire pack. There's also a Jefferies note, by the way, is the first sort of big, sector change that we've seen for the year. So, they're sounding optimistic there. You have the oil and gas names rallying on what's going on with crude. So ONGC, Oil India doing well. On the downside, it is some of the pharma names, the likes of Divi's, DRL, and some of the consumption stocks which have actually come under pressure. And this is in the past hour or so. So take a look at something like a TCS, HUL, Tata Consumer, all of these, sorry, not TCS, that should be Tata Consumer and Titan, not TCS over there. But that's what's going on with the metal names. In terms of cues, we do have some global cues that will come from the second half of this week. So that's important to track. The China reopening, of course, and then Q3 earnings season in just about a week from now. So that's what's going on with the market action. We're going to come back to that in just a bit. But first off, let's talk about the auto sales numbers for the month of December. They've been coming in over the weekend and all through the day today as well. So Sonia is here with a roundup of what looks like quite a mixed bag.
Well, thanks a lot for that. It was a mixed bag for the auto sector in the month of December. Now, I decided to break it up into the strong and the weak numbers. Topping the charts on the strong numbers is Tata Motors, which reported a very good set of numbers in the month of December, both on the passenger as well as the commercial vehicle side. The total domestic sales went up 10%, led by a strong recovery in the medium and heavy commercial vehicle segment. The sales went up 34% in the MHCV segment. Also, the passenger vehicle segment posted its highest ever monthly and quarterly wholesale sales in the month of December due to a good pickup seen in electric vehicles. In fact, talking about medium and heavy commercial vehicles, Ashok Leyland also posted a very strong set of numbers. The total sales went up 45%, MHCV sales went up 61%, and this was largely led by a revival in the bus segment. Bus segment sales doubled compared to what they saw same time last year. M&M also saw very strong traction both in autos as well as in the tractor segment. Total auto sales went up 45% year on year, largely led by the SUV segment, which has done very well due to new launches. SUV sales up 62% year on year, while tractor sales have gone up by 27%. The company says that the Rabi crop sowing has progressed very well. Escorts Kubota also reported very strong tractor sales this time. Total tractor sales went up by almost 19% year on year. Let's move on to the weak numbers now. Maruti had a weak showing, but this was largely because of the year-end inventory being on the lower side, as people generally move to a new calendar year, vehicle, and hence the December wholesale numbers are generally on the lower side. So total sales down 9% year on year, domestic sales down 10%, but the company said that the retail sales are very strong. Maruti crossed 206,000 retail units in the month of December. Bajaj Auto's numbers were also very weak, especially due to a hit in exports. December sales were down by 22%, while export sales were down by 39% year on year. Now, Eicher Motors as well saw a dip in Royal Enfield sales, hence it was on the weaker side. Royal Enfield sales down by about 7%. So two-wheeler makers reported weak numbers, while on the flip side, heavy commercial vehicles as well as tractors did quite well this month.
All right. Thanks so much, Sonia, for giving us the entire exhaustive analysis of the auto numbers coming in for the month of December. And remember, this is an important yardstick for how the economy shapes up, how the consumption demand is. Let's pick one company which is down 2% today in trade. That is Bajaj Auto, and its company's exports also fell sharply in the month of December, coming in lower by about 39% compared to the last year. In fact, Rakesh Sharma, who's the executive director at Bajaj Auto, believes that exports have bottomed out and that could also recover in a couple of quarters. Listen in.
Retails have declined and we have to manage channel stocks. So shipments were also reduced. But like I had mentioned, we seem to be bottoming out now. The free fall which we were experiencing in the April to June, July period has now sort of leveled off, though it is about 25-30% below the peak levels of last year. Key markets like, let's say, Nigeria, where there is a very important event of the elections, which is looming by end of February. As these things resolve themselves, probably in a couple of quarters, we should start to see some kind of normalcy and upward trend.
All right, that is the management of Bajaj Auto saying that the exports, the problems that they were seeing on that front seem to have bottomed out and things will pick up. The street is really not having it. It is one of the bigger losers on the Nifty today. The other space that we're talking about and where the action really is, like I told you, is the metal stocks. These are the top gainers today after brokerage house Jefferies issued a bullish note on the sector. Nimesh is here with the highlights of that report. Nimesh.
Hi, Sonia. So the entire metal pack is buzzing in trade on the back of the first upgrade for 2023, which is on the metal stock. So Jefferies has upgraded both Tata Steel and Hindalco to buy from hold, and they've raised the target price as well. Jefferies has been cautious on the sector for the last 1 year now, and now at these valuations they've turned positive, and they've raised the target price on Tata Steel to 150 from 95 earlier, and on Hindalco the target price is now raised to 600 versus 390 earlier. Now the key reason for the upgrade is they believe that China has started to ease COVID policies, and they're going to support the ailing property sector, both positive for the Indian steel companies. In terms of numbers, they believe the worst in terms of quarterly margins for the quarter for the Indian steel companies, and in terms of earnings cut for both Tata Steel and Hindalco are both behind. So the worst is in the price, and from here on things are going to improve. In fact, Tata Steel is a preferred bet for them in the metal names, largely on back of attractive valuations plus improving asset footprint and balance sheets. On back of that, a big upgrade in Tata Steel, but they've also upgraded Hindalco to a buy with a target price now to 600 from 390 earlier.
All right, Nimesh, thanks so much for all those details. And metals kickstart the new year with gusto shining in trade today after seeing a fair bit of volatility in the last year. Now let's focus on Religare. It's in focus today after a consortium of lenders approved a one-time settlement of dues owed by Religare Finvest, and the company, which remember owed over 5,300 crore rupees to the lenders, had proposed a one-time settlement amount of 2,300 crore rupees, which has been now approved. Now earlier today, we got in touch with the management, Rashmi Saluja, who's the executive chairperson at Religare, who said that the dues will be repaid by the end of January. So there's a certainty to the deadline and the timeline as well. Listen in.
Already paid almost from 80 to 85% dues have already been paid. In fact, we signed the entire agreement with the lenders. 16 lenders we signed on 30th and 31st. Before the end of the day, we paid the lenders almost 85%. So that we have already done. And the remaining also, though we get time, 90 days as per the RBI guidelines, we get 90 days to fulfill the entire settlement. But we are going to complete it in January so that we can really focus on the lending part. When you are actually paying the money upfront, it is a big, source and bonus, and for banks as well. And if you calculate the entire haircut, it is not more than 20-25%.
All right, that is the management of Religare. But moving on to an exclusive now, sources are telling us that the Ministry of Corporate Affairs has granted permission for the demerger of the Shipping Corporation of India. Timsi is here to fill us in with the details. Timsi.
Well, 29 December was the day when Ministry of Corporate Affairs held a meeting to see the proposal of demerger of core and non-core assets of Shipping Corporation of India. Remember, that was a sticking point when it comes to the divestment plans of Shipping Corporation of India. And Ministry of Corporate Affairs, what sources are indicating to us, have granted the permission in principally formal orders expected in next 5 to 10 days. This demerger of core and non-core assets will actually pave way for divestment plans of Shipping Corporation of India. Remember, government plans to divest over 63% of its stake in Shipping Corporation of India. And most crucially, this division of core and non-core assets was something that was actually keeping the plans on hold. And now, once the formal orders have get received by Shipping Corporation of India and DIPAM, the proposal can move forward. So another 5 to 10 days is when the formal or written orders will be given by Ministry of Corporate Affairs. That's what sources are indicating. So let's see how soon the formal orders come in and how soon government then begins the plan for divestment. Back to you.
All right, that divestment and many more on the radar for this particular year. Timsi, thanks so much for getting us all those details. With that, a short break. But remember, a landmark judgment today. The Supreme Court upholds the centre's demonetization decision with a 4:1 majority. More on this right after this short break. Stay tuned.
Guys, welcome back. You're still tuned into Business Lunch on CNBC-TV18. Now, in an important judgment, the Supreme Court has upheld the centre's demonetization exercise and passed the verdict with the 4:1 majority. Ashmit is here with all of the details of this case. Ashmit.
Well, the 2016 demonetization affected everybody without prejudice, and for that reason alone, it was always a hugely political exercise. Political when being implemented, when being debated and discussed, and also when being contested here before the top court of the country. And for that reason alone, Supreme Court upholding the demonetization exercise comes as a huge win for the centre. Here are the details. There was a bench of 5 judges that heard the matter, deliberated upon the matter, and then finally have come out with their judgment, where a majority of the judges, which is 4 of the 5 judges, have held that all is well, all is kosher with the demonetization exercise. The judges have essentially held that, number one, centre was acting well within its powers to direct for such a denotification. Also goes on to say that all the due processes have been followed, that there is no violation, there is no flaw, and also that it is proportional. It is proportional to the objective set out, which is to target black money. It also goes on to say, the Supreme Court majority view, that the 52-day period that was provided for exchange of currency was in fact reasonable, and also saying that there was sufficient consultation between the RBI and the centre leading up to this decision, and therefore nothing wrong with that as well. What is interesting, however, is just Justice B.V. Nagaratna, the one dissenting view of the 5, has very interesting views on the subject. She goes on to say that this demonetization exercise was completely unlawful. She bases that on 2 big grounds. Number one is that the RBI was not consulted. There was no time. This decision was taken within 24 hours, and that despite the socio-economic hardships at play, the RBI simply did not apply its mind. That's one. The second, she says, is that an exercise of power on such a scale requires a very clear legislation, a very clear law or an ordinance. There was none. And on the back of that, Justice B.V. Nagaratna says this was an unlawful exercise. But this is a minority view. Only 1 of the 5 judges have said so. 4, the majority view of the judge of the Apex Court, is very, very clear that all is well, all is kosher with the 2016 demonetization exercise.
All right, Ashmit, thanks so much for getting us all those details. This by far has been the boldest move by an Indian government in the recent past, and also the most controversial one. So big win for the government from the Supreme Court. On that note, a short break on Business Lunch. But on the other side, brokerages reveal their top picks for 2023 when it comes to stocks. We'll get you all the details. Welcome back. You're watching Business Lunch. A quick look at the markets. Yes, gained more ground when it comes to Nifty 50, trying to recoup the earlier gains. And at the moment, in the last half an hour of trade, some of the metal counters like JSW Steel, Hindalco have gained more ground. And some of the other financials like Bajaj Finserv, IndusInd Bank, and amongst the big ones, Adani Enterprise, UPL, these are the ones which are really gaining momentum and giving some strength to the market. Now, remember that it's the first trading session of 2023 and brokerages have revealed their top stock picks for the new year for all of us to know and take cognizance of. In fact, my colleague Vivek Iyer is standing by with all the details at the big wall. Vivek.
Well, thank you so much for that. So, the top picks for 2023, weightage increase, weightage decrease as far as their model portfolio is concerned. We've compiled all of that. So, moving on, first what we're looking at is we're looking at the top picks of 2023 for Jefferies. And what is it that they're betting on? The domestic economy is something that they're very positive on. And they continue to believe that CAPEX is what will drive markets as well as stock picks as far as the 2023 outlook is concerned. So the top picks in the banking space, ICICI and SBI. In the realty space, Goddess Properties and DLF. Within the auto space, Maruti, TVS and Tata Motors is what they're betting on. Moving on in the FMCG or the consumption space, what is it that they're liking? All of the top names, so HUL, Britannia, GCPL, and amongst the industrials, they like Tata Steel, L&T, as well as container corporations. On the other hand, the sectors that they are at this point of time underweight on or that they are a little cautious on, IT services, telecom and healthcare. And in fact, when you're moving on to the mid-cap space, they have quite a few stocks on their radar. They believe that these stocks will outperform. So Thermax, EMS Info, Prestige Estates, Kajaria, Syngene, Supreme, Avasfin. They also like, some names as far as the realty and cement pack is concerned. So Embassy, Dalmia Bharat continue to stay positive as far as Indian hotels is concerned. Now moving on to another brokerage, IIFL. Now IIFL actually has diversified their portfolio in the large cap, mid cap. So when you're talking about the large cap buys, they're positive on Bharti Airtel, SBI Life, NTPC, Bank of Baroda and Interglobe. In the mid cap space, what is it that they like? They like APL Apollo, they like Cummins, they like Apollo Tyres as well as JB Chemicals. In the small cap space, they're actually betting quite big on ICRA, latest listing KIMS Hospitals, Deepak Fertilizers, Powermec as well as Equitas SFB. On the other hand, what is it that at this point of time they're cautious on? They're actually cautious on some of the larger cement names, Shree Cement, IRCTC, Aarti Industries, Divi Labs as well as Wipro is something that they're cautious on. Now moving on to Macquarie. Macquarie actually has their outperform rating. Some of the top names on the list, talking about HCL Tech, Sun Pharma, a little bit of bottom picking. Even HDFC Bank is something that they like. Their focus ideas for 2023 in terms of an underperform stance, they're actually quite cautious on Bajaj Fin, Jubilant Food, something that we highlighted earlier as well. Moving on, lastly, coming to Kotak, what is it that Kotak is liking? They've added a significant amount of weightage in their model portfolio, almost 150 points weightage to SRF. And these are the list of stocks where they've actually trimmed their weight to make way for SRF.
All right, Vivek, thanks a lot for getting us that entire roundup. But with that, since it's the start of a new year, we also spoke with Ramdev Agarwal, chairman and co-founder of Motilal Oswal Financial Services, to understand what stocks and sectors he's looking at and where he sees the strength as we get into 2023. Listen in.
There's no excitement of grossly undervalued market, so you're going to rocket or something like that. So, and then global uncertainties are too many. So right now it's a kind of a subdued thing, but GST collections are very well held up. That's one data that gives you confidence that things are all right. So I think things are all right till November, December. So I think I would believe that 23 will be, we're starting in a very strong note of economic activity, heading into a lot of elections and things like that. And worst of global uncertainties, still the Ukraine war is on, still inflation war is not over. These two are like literally 25% each, or actually bank is bigger if you combine private and public. So financials, lenders are like more like 30%, 32%. Banks are, IT is about 23, 24% of the total corporate profits. Now, I don't think both can do well together. The way index is constructed, I don't think both can be at a high. Anything can happen in the market, but I'll be very surprised that banks and IT both will be at a high. If a bank is at high, can you believe that people are selling, IT is down by 25, 30% and PSU banks are up by 70%. So that's the contrast you're seeing, So I think markets are rotating. Start studying them because they will change the track. Last year they said growth, growth, growth at a loss. So they were not ashamed of incurring losses. They were very proud of incurring a lot of losses. Now they're saying we have to get into profit. Like Baiju said, we want to be in the profit this year itself. So that kind of change. But saying is one thing, doing is yet another. And actually making profit to the extent of the market cap.
All right, so those were really the outlook for the market for the year 2023 from Ramdeo Agarwal. India looks quite resilient. Economic growth is looking quite heightened, but on the other hand, global uncertainties. So that's where Ramdeo Agarwal is. But that it's a wrap on this edition of Business Lunch. Midcap Radar comes up next. Thanks so much.